Hey guys, heading up here, well, it's Alessio. A quick update for you on the financial markets today. Now, as you can see here, I've just come out to the woods just for a quick walk. It's been a really hot day today, and I just thought it would be nice to come out here for a quick walk in the woods, which, by the way, is probably not a good idea if you think about it. You never know what kind of a maniac there might be about here, who might have just pounced on me and attacked me. Hopefully nobody around anyway. Anyway, let's talk about the financial markets, shall we? So here's what's interesting. I want to bring your attention in a few moments to a very fascinating and interesting chart. So you may recall in a video that I posted about a couple of weeks ago, I talked about the fact that the stock market, when it reached all-time new highs, when it rallied to just under 3,600. You may recall the stock market rallied to just about 3,580. That was the most recent high, the most recent top on the S&P. At that point of extreme, market climax, the buying climax, at that point, you may recall what the dumb money confidence in the stock market was. The dumb money, we're talking about the money managers, right? So a lot of people think money managers are really smart, but as you and I know, they're not smart at all. They're actually as dumb as, fill the blank. But the fact is, look, money managers got extremely bullish, overly optimistic, and extremely bullish. That is always a worry when that happens. You may see from this chart, and I showed you this chart, if you recall, from about a couple of weeks ago, that the dumb money sentiment among money managers went over 100, about 106 was the highs there that we made on this dumb money confidence in the market. I'm just looking about, there's someone, I keep hearing someone in the woods among the trees. I'm hoping there's nobody there. Anyway, what I was talking about was the fact that money managers got extremely overly optimistic, extremely bullish, and the sentiment went over 100, dumb money confidence. Oh God, that was a squirrel. There's a squirrel there, guys. Look at this. Can you see this? I have no idea if you can see that. Let's get back to the chart. It was a squirrel. I thought it was a guy. Anyway, what I was talking about was the fact that dumb money confidence among money managers were extremely bullish, extremely overly optimistic, and that, of course, is always a contrarian indicator. Well, given this recent drop in the market, as you may recall, the S&P dropped from 3,580. It dropped down to the 50 simple moving average. As you can see here from the chart, it had a correction or drop about 5%, just over 5%. So given this recent drop in the markets, in the stock market, how much do you think the optimism or the confidence of the dumb money in the market, how much do you think that dropped by? Have a guess. Do you think that the dumb money confidence dropped by, 5%? Do you think dumb money confidence dropped by 10%? 20%? What do you think? A third? No. Have a look at this, guys. It dropped by 50%. Just think about it for a moment, guys. The confidence, the optimism of dumb money, the money managers in the stock market dropped by 50%. Okay, it's not a joke. Take a look at this chart. You'll see that confidence dropped from over 100, 106 to all the way to 53. The reading is now 53 on the dumb money confidence in the financial markets. And the optimism essentially crashed. So whenever something like this happens, that gets me cautious. It gets me worried. Here's the thing. You might have noticed there's a lot of videos right now on YouTube all talking about the crash, a crash coming in the stock market, a crash coming in the financial markets. It's everywhere. Everyone's talking about an impending crash. And that always has me worried when everyone's getting extremely bearish, because as you guys know, there's a famous saying. I don't know where the saying comes from, but the saying goes, a pot never boils when you're watching it. So what does that mean? It means when you expect something to happen, it doesn't usually happen. And when everybody, when the dumb money, when the money managers and everybody is getting extremely pessimistic, when they're getting extremely bearish, which is what's happening right now, as you can see from the crash from the drop in the dumb money sentiment. So when these guys, the dumb money managers, when they get extremely bearish, we need to be extremely careful too, because that often is a contrarian indicator. Now, don't get me wrong here, guys. Listen, you guys know that I'm expecting a major correction in the stock markets. You guys know I'm expecting a major drop, a major correction in the stock markets in the next few weeks and the next few months as we get close to the US elections. So I'm still expecting that. I haven't changed my mind about that. That is still a high probability scenario. The only thing I would say at the moment is that this recent drop has crashed the dumb money confidence. It has caused a dramatic shift in optimism to pessimism. Okay, so when the dumb money are getting extremely bearish, when they're getting extremely pessimistic, that tells me, you know what, we've got to be cautious here because we could potentially see a bounce in the market. So in other words, I think what's happening, I think what we're seeing on that chart of dumb money confidence crashing, I think it's telling us, you know what, it's likely or probable that we could see a potential bounce in the short term, a potential bounce in the short term on the markets. Now, whether that bounce could lead to new highs or a failed rally, which eventually causes another drop in the market, that is something we'll have to wait and see. But for now, in the short term, I think this sudden shift from optimism to pessimism, I think it's an important contrarian indicator. All right, guys, so I better go before Jason gets to me, if you know what I mean. It's been good talking to you here in the woods. Have a fantastic week. Bye for now.